Good morning, everyone. It is November 6th, 2021. It is a nice, solid 40 degrees out today. Exciting as always as development continues. We just launched the Shade Protocol Discord, so be sure to check that out. I think one of the most humbling parts of the Shade Protocol journey so far is seeing the speed of organic growth in our community. There are lots of projects that have existed for a year or two, and we are already having our Telegram rooms up to 6,000, Discord's almost up to 1,000. Like, the growth is happening so quick, and it's very humbling to see one at a time, more and more community members, more and more institutional investors, actually, people that are seeing Shade Protocol and are saying, "What is this?" Right? There's something special going on over there. Let's go check that out. And as people continue to research it, continue to understand the principles behind Shade Protocol, it's just a lot of excitement and energy. So that keeps me going. Whenever there's a long week, there's nothing quite like hopping into a community channel and seeing the hype from all the individuals that are partaking. And for someone like me, I've been pushing like 80-hour weeks, 90-hour weeks, 100-hour weeks, sort of like whatever it takes to keep moving the needle forward. And I just want to give a shout out to the community, because I don't think people understand how much like participation and engagement has a positive impact on like core contributors. It actually makes a huge difference. So I think the community we're cultivating is like very intelligent conversations, a very like helpful community. The number of people that have asked about snapshots, airdrop, and like consistently we've had community members step up and answer those questions. So I just want to say thank you to everyone in the community, everyone who's contributed. And yeah, without further ado, I'll jump in today's topic. Today we're going to be talking about the Silk currency basket as well as the peg migration. We have just recently finished an addition to the Silk white paper that adds more color and detail to the Silk currency basket, as well as the peg migration and how it's going to work. I want to cover this topic today because we're going to release the new white paper to the larger public, and there's plenty of topics we could have talked about, but I figured because that's something that's going to go out to the community very soon, it's worthy of covering on video somewhere. I'll answer some quick questions. Someone asked, "You're not in Lisbon?" No, I am not in Lisbon. Believe it or not, I am not flying all over the world for every single conference. Very focused on building. There will be an appropriate day to visit as many conferences as possible and spread the word about Shade Protocol, but we are not quite in that phase yet. Someone also said, "I like the hat, man." Thank you, James. Definitely appreciate it. And Austin Springer is asking about how we're pegged and how the basket evolves over time. Those are all great questions. So I'm going to share my screen here, and we shall get started. All right. If this was a Zoom call on a corporate level, they would say, "Can you see my screen?" But fortunately, I won't say that. So this is the white paper that's going to be going out to the community pretty soon. It's titled "Silk: Global Volatility Shock Absorption via Standardized Currency Basket." Pretty much, we talk about the inherent risks of fiat currencies, and we talk about the volatility attached to fiat currencies and how the Silk currency basket is able to stabilize in relation to the largest economies in the world and their respective currencies. We talk about the advantages, we talk about peg migration, and finally we talk about some of the legal landscape theory, which we actually talked about last week. So That's the white paper that will be going out soon enough. It's been reviewed a couple times. We'll be handing that off when everything's good to go. And I will now cover it in presentation form just a little bit. So this is an outdated slide. Ignore that. Actually, yes. So today we're talking about Silkshade, the currency basket. We'll start with fiat currency. Fiat currencies are quite strange. The demand for fiat currency comes from the need to pay taxes, as well as the demand for the underlying products and goods that are denominated in that respective fiat currency. So the dollar doesn't have any direct redemption. You can't forcefully go to an entity and say, I want X amount of commodity for my dollar. There's no redemption process. It's backed by the full faith and trust in the U.S. government, so to speak. And the problem with fiat currencies, any individual fiat currencies, they're subject to a range of risks. Inflation, geopolitical conflicts, monetary policy, interest rates, FX markets, and lending risks attached to those domestic markets. If you hold the dollar, you are inevitably exposed to volatility in the purchasing power of the dollar as a result of some of these variables. Granted, there are thousands of variables, but these are the ones that we've convinced ourselves perhaps we have control of, or perhaps we don't, right? And so I think people, the part that's kind of scary is that purchasing power is such a hard thing to spot, right? You realizing that your purchasing power is degrading over time is something that can feel very helpless, right? Like you roll up to the gas station and suddenly prices are higher. You go to the grocery store and the prices are higher. And the interesting part is that we have been led to believe that something like that is inevitable, and there's not really a solution, right? Like everyday people are forced to accept the realities, risks, and volatility of their underlying sovereign currency. And fundamentally, I think the idea that you don't have other options that can be used for everyday transactions that are hedges against these risks right here is simply false. I think it's been a result of the legacy of financial system. It's been a lack of innovation that hasn't allowed us to integrate better payments, better currencies, but we are turning the corner where the paradigm of being forced to inherit the risks of the variables listed here is just simply going to start to disappear. Now, things get even more complicated when we talk about settlement directly between two fiat currencies, because now you have to manage all of these listed variables, but for two different currencies. If you're someone trying to make payments in one of those countries, or you're doing business deals, you're trying to maximize your purchasing power at the end of the settlement of a contract, or at the settlement of actually using it in your everyday life in the countries that accept those currencies. So the foreign exchange, the Forex markets for currencies is the largest market in the world. So this little diagram here of currencies trading for currencies is the largest market in the world by a significant margin. And the question is this process of fiat to fiat the best way of retaining your purchasing power? And the majority of everyday people don't participate in this, by the way, right? Like the idea of, I need to send my dollars to euros so I retain my purchasing power, so then when I go back to the US dollar and go to the grocery store, I didn't lose money. People don't think like that. People don't traverse life like that. Like these are the large entities that participate in the Forex markets because it makes a huge difference on their bottom line. And for everyday people too, it makes a difference, but they don't even know it. They don't know their options. Participating in Forex is like volatile. It's a nightmare. So I think this is where the idea of silk is born. Silk, because it's an index currency, is essentially a perpetual hedge. So in these types of markets, fiat to fiat, people will purchase option contracts to essentially balance out the volatility between two currencies. And if you don't know how option contracts work, I would give them a little search. But essentially, you're hedging against volatility, right? You're betting. You set up your bets in a way that even if there's volatility, your purchasing power is still going to be fine, right? But the problem with this is super, like, option contracts are super far off in distance from end consumers. Like, end consumers aren't setting up option contracts on their wealth. But if we can create a currency that functions similar to a set of, option contracts that are, hedging against the volatility of the currency that you hold or the currencies that you want to trade with, if we can create a currency that represents that, then we have created something that everyday end consumers can use that is also a perpetual hedge. So to retain my purchasing power across a pair of currencies, I need option contracts to hedge against the volatility, right? Like, this is the current way that people solve, oh no, there's all these variables that I have to balance, is I have a bunch of option contracts. But there's a couple of problems with this. So first off, there are certain currencies, smaller currencies out there, that there's not enough like option contract liquidity. They're not nearly as accessible to buy these option contracts. They're called, they're like exotic options. And like I said, so first off, not enough liquidity, difficult to access those hedging contracts. And then there's like the technical barrier. Like, how are everyday people supposed to know how to hedge against the volatility of global markets? Are you serious? We're expecting like mom and pops to hedge, go on an exchange and create contracts to hedge against all these shifting variables? Like, that's such an unreasonable expectation that will never, ever, ever happen. Just not going to. So this is where silk comes in. Silk is a perpetual hedge against the volatility of any single currency. This is like the beauty of silk. Your parents would never have to buy an option contract. You would never need to think about the volatility of this or the relationships between this. You could simply hold silk, because silk is a perpetual hedge, because it consists of a basket of currencies that is representative of global volatility as a closed system. And we call it the Silk Currency Basket, SCB. It's a direct alternative to conversion rates between currencies. And by using silk for everyday payments and settlement, there is a stabilizing effect created for any and all costs and revenue projections due to the reduction in volatility due to the nature of silk being an index currency. So, long story short, what that means is, because silk has less price volatility over time, I would 100% prefer to use silk in business, because I don't have to try to predict these relationships, and I don't have to invest time, money, and energy hedging against these risks. So silk just like solves that. That's insane. That is absolutely insane that we can create currency that has less volatility than any currency in the world and can be used for settlements and projections of daily life, daily usage. This is the end dream, because you have this middle ground currency, this kind of interoperability hub between layer 1 fiat protocols, as they like to say, and everyone is denominating their trades in something that has true stability. So right now, the dollar is where the majority of these denominations of value trades are happening. But the problem with your reference currency being the dollar for the majority of global volume is that means these trades and these settlements are more heavily biased by these U.S. policies and variables. This inevitably is actually inefficient. We can do better than having the dollar be the de facto settlement currency. So if we're able to have silk achieve this paradigm, if I am someone that has, I do business across the globe, why would I attempt to juggle 5 to 10 of these relationships if I simply could hold silk and then settle in those respective sovereign currencies when necessary through silk? And so silk, of course, consists of a whole range of currencies. I'll show you in a second here. So really, when you're converting between like a fiat currency and silk, you're really it's about the relationship between that sovereign currency and the basket itself. So here's an example of the weights that we're targeting. What we do is we look at the top 20 largest GDPs globally, and based off of their respective GDPs in relation to each other, that is the weight that is assigned to those countries. So you'll see in the third column, GDP is in billions, and the amount is how much of the currency gets contributed to the peg. So in this case, we were targeting $100 for the silk basket value. This is still in flux. We might be targeting $1, we might be targeting $1.50, $1.10, whatever have you. That is still in flux. We can arbitrarily choose what the initial starting peg is because it's nominal in that sense. Like the amounts all across the line just like fractionally change. So instead of $30 US being contributed to a $100 peg, it would instead be 30 cents being contributed. Or if you were targeting $10, it would be like $3 contributed. So we have flexibility with the target peg amount. And this is the other section here. The yuan, the ruble, the real. We have a whole basket of global GDPs represented here. Now, the reason GDPs are kind of the initial target is that GDPs are released on a monthly basis from very reliable data sources. We're poking around to see if there's better alternatives than GDP for like cross-economy changes. But at the end of the day, this type of hedge should be, have more volatility resistant than just the dollar by default. Like it just makes sense. If I have something that only consists 30% of the dollar, it's gonna have less volatility than it being 100% of the dollar, right? It's just intuitive, the power of like indexes, right? You have indexes that of the S&P 500, and it's a similar concept, but just for currency. So in the upper left-hand corner here, we have an example. This is a simplified example of peg migration. So things can get a little trippy here. So what you have here is 5 currencies with the IMF for this example. This is not the end set of countries that we're going to be using, but you have their percentage of GDP, you figure out their quote, and then you figure out their currency amount contribution to the peg. And if you multiply the currency amount in the 6th column times their quote, you then have their weight contribution to the peg. Once again, we're targeting $100 here. So if you add up the 7th column, that's going to add up exactly to $100. Now, once you establish that price with that amount of currencies, the price then begins to fluctuate, right? Because if the yuan or the yen appreciate in relation to the dollar, then essentially the dollar amount of what silk's worth is goes up. And we're going to have more charts and more examples of this. I just wanted to kind of give a sneak peek of how we're thinking about this today. So if you want to see more charts of, volatility of silk versus the dollar, we'll have more infographics like that on the way. And if you want more examples of how price fluctuates after the peg is established, we'll have more examples for that too. But the simplest way to think about it is those currency amounts, the value of those currency amounts fluctuate, and therefore your peg's value then fluctuates. In our case, it fluctuates less. because no single currency has too large of an impact. So on the bottom here, you'll see what happens when the quotes change. The dollar quote for each one is changing. And also the weight contribution change. So let's say the US in the first chart was 43% of the GDP. Let's say a year later, the US is only making up 33% of the world's GDP. Then suddenly, the whole basket gets recalculated, and you'll see that the currency amounts from each one of those countries changes. The weight contributions will still add up to the price, but then it is the value of the currency amounts from there. Their respective weights essentially changed instantaneously. So the white paper does a better job of explaining this. This is probably the peg recalculation is one of the trippiest things to play around with. So I would paper and pencil the white paper equations to get the best, most thorough understanding of how peg recalculation happens. But long story short, Silk governance will have the opportunity to change these weights. So while we're using GDP as our initial benchmark, ultimately it's up to Shade governance to decide what weights get attached to what. So if Shade governance says the US dollar should only have 25% of the weight and that the yen should have an additional 5%, they can do that. If Shade governance says they want a commodity to be added that takes up 4% of the weight, they could do that. So it's super powerful. I mean, Shade governance essentially becomes the maintainer and the decider of what the basket consists of. That's an incredible amount of power, especially if this becomes a globally adopted currency. Shade could become absurdly demanded even by sovereign currencies that want to try to have an impact on Silk's peg. So Shade could be one of the most valuable assets in the world if Silk becomes a global settlement layer. So you heard it here first. Silk has so much of a disruption potential that sovereign nations could maybe want to position in Shade one day. That's like a real paradigm that I've thought about before. So power to the people, power to decentralization. Let's hope we don't turn those eyes sooner rather than later, right? So that's the brief rundown. We will share more via the white paper in the coming days. I just wanted to have a brief rundown of that. I am now going to open up the YouTube channel here and see if we can answer any questions. So Sean said, wow, I didn't even think of Silk beyond regular people utility. Awesome to see it as an institutional sovereign level. Yeah, removing volatility. 100%. It is a perpetual hedge. Silk is a perpetual hedge against global volatility. So exciting. So exciting. I'm going to open up the Discord here to see if we have any questions. So there was a question from... Actually, no, Melch never asked a question. I believe that's all for today, guys. We'll keep this one relatively short. I hope you have a wonderful Saturday. It was November 6, 2021. Be sure to keep engaging in the community. Keep spreading the word on Shade Protocol. I appreciate your time and energy to watch this video, and I hope you have a wonderful day. Thanks, guys.